Advances in digital banking will not eliminate the branch. It will allow for more creative ways to help clients achieve financial well-being. Hendrik Smith. Hello, and welcome back to Tech Obsolence 42. Today we're diving into Project Rosalind, a major experiment exploring how a retail central bank digital currency ecosystem might work. We'll look at what it is, what the team found, and why it could reshape how we pay and how money works. Let's get started.
Central bank digital currencies, or CBDCs, are digital forms of cash. Many central banks are exploring the use of CBDCs to buy goods and services in shops and online. Project Rosalind from the BIS Innovation Hub London Centre and the Bank of England is testing how APIs could enable retail CBDC payments and support innovation. The project builds a prototype of this API. APIs define how systems should talk to each other. The prototype connects central bank ledgers with private sector service providers. It experiments with API functionalities that would enable providers to develop applications. These applications would help individuals and businesses to manage their CBDC balances with the central bank and make payments to each other in shops and online.
Project Rosalind is a joint experimentation by the BIS Innovation Hub, London Centre and the Bank of England to build a prototype application programming interface, which is an API. Its intention is to connect a central bank's ledger and infrastructure with private sector user-facing services. The idea is that the central bank issues digital currency, then private sector entities provide wallets, merchant services, and fintechs. They plug into it via APIs to deliver services to consumers and businesses. According to the BIS release, the project developed 33 API functionalities and explored more than 30 retail CBDC use cases.
Working with collaborators from the public and private sectors, the project explored many CBDC use cases. Some use cases tested integration with existing payment systems, some tried new ways to make payments, and some tested applications with emerging technology.
The BIS understands the payment rails will be the first sector that will be disrupted by this tech. Because payments and money are changing fast. If you're using an app, digital wallet, pay by phone, or scan code, the way money flows and the intermediaries change. A retail CBDC means public money backed by the central bank in digital form, widely accessible to households and businesses worldwide. Project Rosalind gives a concrete prototype, how such a system could be built, how private sector innovation can plug into a central bank ledger via APIs, how offline modes or different devices could work, and how standardization might enable interoperability. For viewers like you and me, this could mean more wallet choices, new payment models, potentially lower costs, new business types, and from a policy point of view, how central banks maintain trust, security, and inclusiveness in a digital age. The project discovered that a standardized API layer in one language can support a diverse range of use cases, which is promising for scaling a retail CBDC. But offline payments remain more challenging in practice. Synchronizing wallets, handling offline and online reconciliation, lost or stolen devices have increased fraud, which is still a risk. There's much work to be done. The prototype also experimented with programmability. The potential for business logic embedded in payments, conditional payments, or micropayments is highlighted. Some concrete use cases include peer-to-peer payments between individuals, merchant payments in store or online, small business transactions, and various device types for payments. All in all, the project shows that the architecture could support the kind of modern payment environment we're moving towards.
The project explored how the API prototype could support private sector programmability. For example, after placing an order, a customer could agree to put away a certain amount of CBDCs so that a merchant could have certainty that the customer will be able to pay. Programmability could also allow payments to be triggered when agreed conditions are met, so that consumers would only be charged when their orders are delivered. The project also tested a privacy model that would not give the central bank access to users' personal data. The Rosalind experiment shows that the API prototype could support many different use cases and could work with different central bank ledger technologies. It could connect the central bank, service providers, individuals, and businesses to create an ecosystem. New ways to make payments could be added as the ecosystem continues to innovate. Project Rosalind, building API prototypes for retail CBDC ecosystem innovation.
To wrap this up, Project Rosalind is a meaningful stepping stone in our understanding of how retail CBDCs might operate. It shows how an API layer approach can work, that many use cases are viable, and that private sector innovation together with central bank infrastructure is a potent combination. For you, retail, this matters because you use money and transact. You use devices, the systems behind all